everyone, welcome to Breakout Wednesday. It is November Wednesday, the 27th, 2019. It's about 2 p.m. per time, 5 p.m. on the east coast of Aussie and middle of the night in America. So this is chart of the NASDAQ, which is still in a strong uptrend. Let's get the All Ords. Look like they're breaking out of this base-in range here, and so hopefully, touch wood, this is the start of a bull market, but time will tell. Obviously, there's been pretty much widespread breakouts in Aussie from some of the leading stocks, Xero to Coles, Cochlear, ResMed, CSL. All the ETFs are gapping up, moving up each day. Even the big miners, Rio and BH, look like breaking resistance, are looking strong. Okay, the banks are a bit of a different story. We have Westpac and NAB, which have been getting hammered lately. I won't go through why. They've been in the news. And then we have Commonwealth, which is looking as strong as anything, breaking resistance. And I've actually added to my long-term investment in Commonwealth on the break of this resistance. I've been in this stock for a long time, but I think the relative strength and divergence the CBA is showing is got to be a good sign. Okay, we have Macquarie Bank up near new all-time highs. Anyway, so I won't go through all that. What I'm going to do today is talk about my exit strategies, because following on from last week's when I talked about stop losses, it's really easy to find entries. It's a lot harder to get out of entries, and the money's made in managing positions, not in finding sweet setups. Okay, because the sweet setups is just part of it. It's important, obviously, but you need to be able to manage that position. If you're incredibly impatient and you buy something and your goal is to swing trade at high for a massive momentum move, and you end up selling it after 2 days for a tiny profit because you panic or whatever, your emotions get the better of you, then you're not following your plan. You've been incredibly undisciplined, and you're going to end up being a bad, losing in the long run, most likely, or just not doing that well. If you have what it takes to just formulate a plan and just stick to it it really is pretty simple. You just need to stick to the plan, and if you can do that, then in the long run, you're going to do a lot better. And so one of the main stocks I've been talking about the last few weeks has been setting up in this nice big base is AD8. Okay, and so this, obviously, I talked about it last week and the week before, maybe the week before that. It broke out of this base. It formed 2 tight days after it broke out, and then it's gone for it. So I've added to this position. So I pyramided into it. I took the entry, obviously, on the 19th, and then I added a bit to it on the 22nd of November, a much smaller pass on the 22nd. But now I'm setting the stock, and my plan is I'm going to sell half of it at the depth of this ascending triangle pattern. So just take the depth, add it to the top, and I'm going to offload half of it just below that, and then I'm going to let the rest run with a 21-day exponential moving average. Okay, and so before I get into my exits, I'm only talking about my short-term momentum trading, aggressive momentum trading. I'm not talking about long-term investments. I've managed those exits in a completely different way. Okay, but short-term momentum stuff is what I'm referring to here. Okay, for this stop loss stuff, right? So the 2 things that will make me sell the second half of that parcel is either a break below the 21-day exponential moving average or a break of support. Okay, like a support trend line or a wedge or something like that. Okay, and so if we look at the last move up from 88, there's this break of this trend line here would be my exit. Okay, so here on the 24th of June, it broke that trend line, and that would have been a signal to get out there. You would have waited a few more days for a break below the 21-day exponential moving average, and that would have been the signal to get out. So I'm going to run through some past trades which I've talked about on the Breakout Wednesdays. So this was EOS that I traded, and had this awesome little breakout here, rode it up. Now this I sold a bit on the way up, and blah blah blah. We can go back and listen to those talks a few months ago, and then I got out of the rest of it when it broke down from this kind of descending triangle looking thing. All right, and just to break below this this bar here was my exit to get out of the rest of it. Okay, and then on the same day it broke through its 20-day exponential moving average. So so that was my exit for that one. So let's just have a look at a few open trades. Apple, I'm in, and I'm riding this higher, and my exit now is going to be a break of support or a break below the 21-day exponential moving average. So, I draw support lines as going up. If possible, I'll draw a wedge or a trend line if one appears. Otherwise, I'm just going to ride this thing, because these can go really, really high, and a lot of these momentum stocks will stay above their 21-day exponential moving average for a long time. But downsides, you're going to get whipped a lot. Okay, one of the stocks I talked about a lot a few months back was Shopify. I was long that for a while, and now if we just look back here, I was using a break below the 21-day exponential moving average. So if it closes below it one day, I'll just sell and open the next day is how I'll do it, right? If I'm not staring at the screens all day. And so I was long this stock from this breakout back here, but it broke below this exponential moving average on the 25th of June. I got out and opened the next day, and then the thing rallied up for the next 2 months, right? And so that is life, and there is no perfect way to place a stop loss. You just need a system, and you need to stick to it, okay? And so my system is I'll get into a position, sometimes pyramid into it if I really like it, and then I'll sell off half at a profit target, and then I'll let the rest run with either a support break or an exponential moving average break, okay? So another stock I'm using the same rules for is Microsoft, which been talking about. I'm just letting that run. I'm going to sell it with a break of the 21 exponential moving average or a stop or a support break, okay? Amgen, another one I'm talking about, which I'm long, is I'm going to do the same thing, right? Either I've taken half off actually already of this thing, and then I'm going to trail it with a exponential or a break of support, right? And so now I don't do that for every short-term momentum trade. I tend to make my mind up before I enter. So one of the stocks we were talking about that I was trading, AMD, I'm out of this thing, right? So it depends a bit on the base that is forming and how long and how good the base is. So like if we go back to 88, the stock that I'm loaded up at the moment on, this is a really good base, right? Like this formed between 25th of July and 15th of November. So it's a pretty long-term base. There's just nothing I don't like about that base. And then we go back to AMD. As I was talking about the last few weeks, this was a short-term Davis box that I took here. So this here from the 5th of November until the 12th of November. I mean, that's such a short-term Davis box. And so, for stuff like that, I'm going to be way, way, way more aggressive. And so I got out of half of this. I think it was about $41, and I got out of the rest on a break below this bar here, so where this line is there, okay? And so I'm out of that trade now, and so that's a super, super short term, it's not that short term, but it's a week long trade or whatever, and I trail my stop loss below a 2 or 3 bar reversal, or I wait for a doji. If you guys remember the trade that I did, and a bunch of you did, on UWL a few months back, okay, we had this awesome move up from here, but then I also just traded this move from here, okay? And remember in the talk, this thing raced up, gave me a doji, gave me another doji, and I just kind of moved my stop below these bars. And so that's kind of really short-term momentum trading. I wasn't willing, because this was a new float, I'm not willing to wait for this to break its 21 exponential moving average, because you're going to give a lot back. I use a 21 exponential moving average as a stop loss when I really, really like the setup, right? When it's something that I think to myself, gee, like this is a big base. I mean, who the hell knows how high it could go? Maybe it could go up 100, 200, 300%. Okay, just remember the old A&O, okay, how far this thing went up. Things go up further than most people think they're gonna. And so, but even if you look at this, I mean, the 21 exponential would have chopped you in and out quite a lot, right? So it's far from a perfect system. However, I think trading's not about finding the perfect system. It's about having discipline and just doing things consistently and just being disciplined, okay? It's way more important than having a good system. There's no such thing as a perfect system, right? Like any stop loss system you're ever going to come up with is going to chop you in and out, and not be. It's not going to be perfect for every single trade, but you just need to be consistent once again, all right? So now let's just go through a couple other examples. So, All right, so another stock I've been talking about a bit on and off is CSL. Okay, so now CSL I'm in from back here on the 10th of October, and I'm just kind of letting this go. I've still got my full position here. This is obviously a company. It's a massive, awesome company that are doing really good, very profitable, and it's a real company. It's not a tiny little startup that has no revenue. And so this is the sort of thing I look at and think, okay, this in a good bull market, this could run way higher than anyone thinks it's going to. And so I'm using a 21-day line or support. And so this thing started to form a support line here. And, if this holds this support and breaks down there, it would probably be a decent exit, as far as I'm concerned. So another one that I've talked about is Crown. Okay, and so this is something that, I talked about when it was in this range, and I said, I think it's got a decent risk-reward ratio on a break above this range. Okay, and so a tight stop loss was put in place below the low of the day at the breakout, and then it's just kind of cruising up. And you see how the price has just stayed a bit above that 21-day exponential moving average. It's kind of chopped up and down. And anyway, I think some people use a 10-day moving average or whatever. I think I like the 21. It's worked for me. And I'm just very consistent. When I have a setup that I really think might have a move for 2-3 months, and this tends to be what I use. I scale out a profit target, half of it, then I'll let the rest go with that exponential moving average, right? So a few other stocks that have been going great guns this week. Barber broke out, and so many stocks in America are just going for it. So now, just to quickly look at a few setups, I think that's enough on that. Obviously, if you're a longer term trader, you can use a 50-day moving average or a 100-day moving average. If you're a long-term investor, you can use a 200-day moving average, or you can even flick to a weekly chart and use a 200-week moving average. There's so many ways to manage positions. You just need to figure out, you're a short-term momentum trader or a long-term investor, and then you come up with stop loss plans. There's ATR methods and stuff that Frank teaches, and so if you guys go to Frank's talks, I'm sure he'll go through that in detail. Okay, now a few other stocks I'm watching in Aussie. CSR's forming this really tight range here, and we had a big move up here on decent volume. So volume on the 1st of November was big, volume on the 5th of November was 4th of November was big, and now we've got this tight contraction pattern. Okay, we've got volume dropping off. You have a look at the volume on the 25th of November, it was super low. On the 18th and 15th of November, it was super low, and it's definitely got some of the hallmarks of a setup that looks like it might have a lot more in it, especially in this strong market that we hopefully are heading into. It's a setup. It's got a lot going for it. CSR. So other ones I'm watching is Domain Holdings. Okay, it's just sitting at all-time highs. No, it's not quite all-time highs. Apologies, but that thing needs to tighten for me for at least probably another 2 weeks before I'd consider it. I want to see volume continue to dry out, but certainly that's on my watch list. UW World is on my watch list. This is the stock I was just talking about just before. Let's just have a look on the weekly chart. It's just sitting at all-time highs. It's in the process of forming a nice base at all-time highs. So if it can just come around and form a nice tight handle, then we're just going to have a nice base with a tight handle and a pretty good risk-reward ratio. And so that's one for my watch list. Another one on my watch list is AMS, which is a bit like UWL. It's forming a nice base. This thing might just chop around for months or go down, but it's on my watch list, and if it can just continue to tighten and form a nice tight right-hand side here, then a break of all-time highs could be good. A stock on the NASDAQ I'm watching is GH. Okay, this massive revenue and increases, and it's a true cancelling stock. It's forming a tight little range there, so if it can just stay in that tight little range and then break up, I'm going to be into that. Another one I'm watching in America is on the NYSE is Eventbrite. 200 days still pointing down, so it's not perfect, but I'm probably going to have a trade at that with a very tight stop loss. Another one in Australia, I'm watching EML. It's in a Darvis box at the moment. We've had big volume come in the other day on a nice green bar, and it's sitting at all-time highs. So I'm pretty keen on EML. Problem is now I'm nearly 100% invested, so I'm gonna this way, I'm going to be trading a bit on margin and stuff, which is not something people should be doing unless you've been doing this stuff for a long time. Okay, so that is all for now, guys. That's about 15-16 minute talk. So that goes through the way I get in and out. Now, actually, there's one other thing. Someone on the left me a YouTube comment asking how where do I get my fundamental information from and research and stuff. And to be honest, most of it just comes from the charts. Let's say back to the old 88, when this is setting up, I'll just read about it a lot. I'll go through some of their announcements. I'll just read a bunch of stuff, and so most of it I find on the charts first, and when I really like a setup forming, then I'll try and read about it. However, there's a few other things I like. There's this guy called Howard Lindzon. He's got this blog, howardlindzon.com. He blogs nearly every day. It's always about America, sometimes about China, and I find it really interesting and helpful. Just give me an idea about what's happening in the bigger picture around the world, and what the major big trends are. Where's a lot of the big money flowing. All that sort of stuff. He runs a venture capital firm called Social Leverage, I believe, and he's into a lot of stuff. He's a really interesting man, and I've been reading his stuff for years. It's very, very interesting. There's another website called abnormalreturns.com. This guy just finds really good stories from around the world and loads them up and just provides a link to it, right? So and I just go through his website. I check it out, not every day, but probably once or twice a week. And usually when I'm in bed or just lying on the couch, and I'll just read a bunch of what this guy has to say, and a lot of the links, and I find it very interesting. And then for American stuff, I use Finviz. Finviz is just if you want to find out earnings dates or news, all that sort of stuff. Finviz is a really good website. That's about it. I guess Twitter. I used to use Twitter and follow some interesting people and see what they had to say about stuff. But I'm kind of off that these days. I kind of, there's only so many hours in a day, right? Catch ya.